Welcome to the Duck Dive. Today, we're taking a closer look at Coupang's latest quarterly numbers. It gives us a real-time pulse on this, key player in Asian e-commerce. This earnings call wrapped up after U.S. markets closed on August 5th, 2025. So we're diving into the freshest insights on their strategy and, well, their financial health. Exactly. And just to give you the snapshot right away, Coupang reported a really strong top line for the quarter. Revenues came in at $8.5 billion. That actually beat the consensus estimates.
Oh, okay.
Yeah, and it represents a robust 16% year-over-year growth. Or get this, 19% if you look at it on a constant currency basis, which is pretty important given the weakening Korean won they mentioned.
Right, 19% constant currency. That's definitely impressive momentum. How did that flow through further down? Gross profit, for instance.
Well, the efficiency story, it absolutely continues. Gross profit hit $2.56 billion. That works out to a 30.0% margin. Yeah. And that's up 79 basis points year over year. So almost 0.8% better. And what's even more striking, I think, is their core product commerce segment. That part had an even higher gross margin, 32.6%.
Wow.
Yeah, expanding by a huge 230 basis points. This isn't just, a strong number. It really shows how mature and leveraged that core business is. It's basically the engine funding the new stuff.
That's a great way to put it, a strong engine.
Yep.
So how did that strength carry through to, say, adjusted EBITDA and the bottom line?
So adjusted EBITDA, which is, a key measure before interest, taxes, and stuff, that stood at a healthy $428 million. That gives them a 5.0% margin, up 51 basis points year over year.
Still growing then.
Still growing. And trailing 12-month free cash flow, another important health indicator, was $784 million. Solid, however, and this is where things get a bit mixed. The GAAP EPS, the official earnings per share, came in at 0 to 2 cents, and that missed the consensus expectation of 0 to 7.
Ah, okay. So strong revenue beat, positive adjusted EBITDA growth, but then a miss on the GAAP EPS. How significant is that miss, especially with all the investments they're making? Is the market, maybe missing the long game here, or is it a genuine worry?
It's a nuanced point. You're right. The revenue beat, it shows great execution. Customers are clearly engaged. But that EPS miss, combined with the heavy investment talk, it definitely created some caution right after the call. It suggests the market is maybe weighing that short-term spending impact pretty heavily, even while the company's pointing towards long-term value.
Okay, let's unpack that more. Let's really dive into the core business. You mentioned the efficiency, the strength. It's interesting how the CEO keeps framing Coupang's strategy as a multi-decade journey. What does that really mean for how they operate?
It's like fundamental to their philosophy. They talk about a flywheel effect. Each improvement makes the next thing better. And AI-driven automation, logistics upgrades, those are the key levers they see for expanding margins over time. It's definitely not about quick wins. It's a sustained long-term build-out. Market share and customer experience seem to come before maximizing profit right now.
And you really see that long view in the core product commerce segment, don't you? Still growing, margins expanding. What's driving that sustained success?
It's a relentless focus, really. Expanding selection is huge, offering competitive prices, and just nailing the delivery experience. They specifically mentioned bringing in high-end brands, Dolce Gabbana, Malone, Estee Lauder, Lancome, alongside popular ones people know, like Swarovski, Converse, Wedgwood, Royal Copenhagen, Nespresso, and their rocket delivery, same day, dawn, next day. That's still a massive draw. Customers are voting with their wallets. They said there was a big jump, over 25% increase in people buying from 9 or more categories this quarter.
9 or more categories. That shows real engagement, a widening shopping basket.
Exactly. And underpinning a lot of that is their fulfillment and logistics by Coupang, the FLC service.
Right. That sounds like a key enabler for their marketplace sellers. How critical is FLC?
Oh, it's huge. It handles storage, packing, shipping, returns, basically takes all that hassle away for sellers. He said FLC volumes are growing at multiples of the main business. So it's clearly a big future growth driver. It just empowers their whole ecosystem.
Makes sense. And talking efficiency, they always highlight tech investments, automation, robotics, AI. How are these actually, delivering benefits?
Yeah, they gave some specifics. Advances in automated picking, packing, sorting systems, using machine learning for better demand forecasting. These aren't just buzzwords for them. They're generating real benefits, apparently. Better customer experience, lower service costs. It speaks to operational excellence. Innovation equals efficiency for them.
And hearing the CFO reiterate that long-term goal, greater than 10% consolidated EBITDA margins, that sounds pretty ambitious.
It's a very clear signal of their conviction, isn't it? They believe the groundwork they're laying now, the scale, the efficiencies, it will eventually get them to that double-digit margin. Suggests there's still a lot of potential they haven't tapped yet.
Right. Okay, so moving from the strong core, let's talk about the aggressive growth initiatives. This is where a lot of the spending is happening. Taiwan, for example, huge focus. Why are they so confident there?
Yeah, management sounds incredibly bullish on Taiwan. They highlighted being able to replicate those, quote, exceptional customer experiences, like in Korea. This growth in Taiwan, it's not just about entering a market. It feels like Coupang's big test case. Can they prove the Korean flywheel works elsewhere? Can they turn big investment into rapid market capture in a new place?
And the numbers coming out of Taiwan are, well, they're pretty eye-popping.
They are. Revenue surged 54% quarter over quarter, triple digits year over year, and they expect even faster growth in Q3.
How are they doing that?
Selection's a big part. It grew nearly 500% this quarter alone. They're getting direct deals with global brands, Coke, Pepsi, P&G, Unicharm, plus local Taiwanese brands. And they launched their WOW membership program there this quarter too. That's their premium tier, free shipping, discounts.
Right, the loyalty driver.
Exactly. And they said it's already driving higher engagement and spending from members, just like it did in Korea.
Okay, which brings us to the developing offerings portfolio. Mostly Farfetch, right? It sounds like it's being reshaped, but it's also a massive investment drain. They guided to an adjusted EBITDA loss of $950 million for developing offerings in FY25. That's nearly $1 billion. What's the thinking behind accepting that kind of loss?
It is a huge number. It really underscores their conviction that Farfetch is a strategic key. It unlocks the global luxury e-commerce market. It's a high-margin area they believe offers huge long-term value and diversification away from just Korea. They call it optionality for international luxury. Even fintech plays down the line. It positions them for growth beyond their current region, even if it hurts profits right now.
So a long-term bet on luxury. And beyond Farfetch, they're expanding the ecosystem elsewhere too. Coupang Play, for instance.
Right. Coupang Play launched a sports pass and a new ad-supported tier for people who aren't WOW members. The goal seems to be making the whole ecosystem stickier, getting more people involved, and eventually finding more ways to monetize.
And Coupang Eats. How's the food delivery side doing?
Still sustaining momentum from last year, they said. Focus remains on selection, value, and fast, reliable delivery. Management also noted there's still significant room to grow, especially outside of Seoul.
Interesting. And looking ahead, they mentioned AI-driven fulfillment pilots.
Yeah, teasing that a bit. The idea is to boost pick rate productivity in warehouses and cut last-mile delivery costs per order. Fits right into that long-term theme of operational efficiency, always trying to optimize their logistics.
So we've covered the core strength and these big growth bets. Let's pivot to how they're managing the money side of all this, their financial discipline and capital allocation. Despite those big losses in developing offerings, you said consolidated adjusted EBITDA actually expanded by 50 basis points. How does that work?
It really shows the power of that core business buffer.
Yeah.
Their main Korean e-commerce operation is so efficient now, it can basically absorb the losses from these new ventures like Taiwan and Farfetch and still show overall profit expansion on that adjusted basis.
That's pretty powerful, yeah.
It is.
And what about operating expenses, OG&A? They noted it was up as a percentage of revenue this quarter. Is that a concern?
Well, they explain that. Operating, general, and administrative costs, OG&A, were up because of tech and infrastructure investments, mainly related to Farfetch restructuring and building out warehouses in Taiwan. But they expect that percentage to decline in the near to medium term as those things normalize. It points to leveraging their scale down the road.
Okay, makes sense. And there was also that temporary high tax rate projected for the full year, 65–70%.
Yeah, the accounting rate.
Yeah.
They said that's mainly due to the early stage losses in Taiwan, which aren't generating tax shields yet, and some specific non-deductible expenses. Something to watch, but they framed it as temporary and linked to the expansion phase.
Right. And maybe the biggest financial news was the board approving a $1 billion share repurchase program. What does that signal?
It's a significant move. The program doesn't have a fixed end date, so they can buy back shares opportunistically when they think the price is attractive. It's about generating long-term returns for shareholders, part of the, disciplined capital plan.
Yeah.
It definitely signals strong confidence from management in the company's value and its future ability to generate cash.
Okay, so putting it all together.
Yeah.
What was the immediate investor reaction? You mentioned it was a bit mixed.
Yeah, somewhat mixed is a good way to put it. The stock ticked up slightly into the close before the call, but then slipped a bit afterwards in after-hours trading, though on pretty light volume. Sell-side analysts, the folks who write the research reports, mostly noted that the strong revenue offset the EPS miss. But some definitely flagged that slight dip as reflecting, ongoing skepticism about profits, despite the great top-line growth.
And what about the buy side, the actual fund managers?
Chatter there seemed focused on those strong product commerce EBITDA margins. They saw that as proof the core business really has scale leverage. However, there were reports of some hedge funds trimming their positions. They seemed worried about the drag on free cash flow from all the investment spending guidance for developing offerings. So you really saw a split. Management's long-term optimism versus the market's focus on the immediate financial impact.
Right. And if we zoom out a bit, Coupang stock has actually done really well this year, hasn't it? Beating the retail sector ETFs.
Exceptionally well, yeah. Strong returns over the last 1 month, 3 months, and year to date. Way ahead of the broader retail ETF. That momentum leading up to the call was partly because of that WOW membership fee hike they did in July, and also ongoing optimism about the Farfetch integration.
And what's the bigger picture in Korea supporting this?
Well, the overall e-commerce market growth in Korea is actually slowing down a bit, but Coupang is aggressively taking market share. Their same-day and dawn delivery is just superior, it seems. Plus, softer oil prices are helping ease cross-border logistics costs, which helps their margins. And importantly, the company confirmed they haven't seen any significant hit from recent global events or those U.S. tariffs on their core business.
So it feels like the story is shifting from purely growth at any cost to becoming a profitable regional platform.
That seems to be exactly the narrative shift. And Taiwan is the crucial test case for that evolution. If they can make Taiwan profitable relatively quickly, it proves the model can travel.
So looking ahead, say the next 6-12 months, what are the key things investors should be watching, the catalysts?
Okay, several key things. Definitely the Q3 Taiwan growth numbers need to see if that momentum continues. Then how the WOW fee hike holds up during the holiday season. Will customers stick with it? That's elasticity. Updates on Farfetch synergies. Are they finding cost savings? And what's its actual path to breaking even? Also, keep an eye on potential changes to Korea's VAT rules for cross-border imports that could impact them. And just the broader macro picture, Korean consumer spending, and where oil prices go as that affects logistics costs. Lots to track.
Absolutely. Okay, and this brings us to maybe some interesting ways people might think about approaching this stock.
Yeah, some potential strategies given all this information.
Precisely. And just the standard but very important reminder. What we're about to discuss is purely illustrative. It is absolutely not financial advice. Always do your own research and consult a qualified professional before making any investment decisions. Okay, right. With that said, here's an outrageous but plausible trade idea we kicked around for Coupang.
Given that clear pivot we talked about, becoming a profitable regional platform, the strong revenue growth, the aggressive expansion into places like Taiwan, maybe the market's current hang-up on profits is a bit of an overreaction. Management keeps reiterating that 10% plus long-term EBITDA margin goal, and they just announced that $1 billion buyback. That signals real conviction from inside the company.
So the idea here is potentially initiate a long position in Coupang shares. The ticker is CPNG. But at the same time, you could look at selling out of the money put options, maybe 6 to 9 months out.
Right. So you're selling someone the right, but not the obligation, to sell you shares at a price below where it's currently trading, a price where you'd actually be comfortable owning more shares anyway if it dipped.
And why do this?
Well, this strategy lets you benefit if the stock goes up, as Taiwan scales faster or Farfetch gets efficient quicker than people expect. And for selling those puts, you collect a premium up front. That premium acts like a cushion if the stock dips a bit, or it just boosts your return if the stock does well. It's basically a conviction play. Betting that the market's short-term focus on the investment costs is missing the bigger picture of long-term value being created.
An interesting structure for expressing a bullish view, definitely. Okay, so to recap this deep dive, Coupang's latest call showed really robust revenue growth, continued strategic investments, especially in Taiwan and Farfetch, ongoing improvements in operational efficiency in the core business, and a clear commitment to returning capital with that new $1 billion share buyback.
Yeah, and while the immediate market reaction showed maybe some skepticism around the near-term profitability, the underlying story seems to be a company methodically building out a scalable and eventually profitable regional platform.
So here's something for you to think about. How quickly can Coupang translate these impressive market share gains and these big strategic bets into consistent, visible, consolidated profitability, particularly as that ambitious Taiwan plan unfolds? And what could that ultimately mean for the competitive landscape of e-commerce across Asia?
Definitely key questions going forward.
We'd love to hear your thoughts on Coupang's trajectory after hearing this. Until our next deep dive, stay well informed.